Welcome to your daily 5-minute crypto brief with Satoshi and Nova. Today is July 5th, 2025. I am Nova.
I am Satoshi.
Looking at the numbers, it's a bit strange, isn't it? Bitcoin pulled back slightly, about 1.6% to $107 in 8 case. And Ethereum dipped a bit more, 3.2% down to $2.49 case. But then you look at the crypto fear and greed index, and it's sitting firmly in greed at 73. So how do we square that, this sort of market hesitation, but this really strong underlying optimism? What's driving these cross currents?
Yeah, it's fascinating because despite those dips in Bitcoin and Ether and some altcoins took even bigger hits, the overall appetite for risk in the wider financial markets is, it's still pretty strong.
Yeah.
And that risk-on feeling usually helps crypto, but it's running into some pretty strong headwinds from the economy right now. Macro signals are pulling the other way.
And those macro signals, they're definitely making noise. That U.S. jobs report for June, stronger than expected. Non-farm payrolls jumped by 147,000. Unemployment dipped to 4.1%. Now, on the surface, that sounds great for the economy, right? Good news. But for crypto, what are the potential ripple effects of that kind of strength?
It's a really critical point. Because it's solid job growth like that. It just reinforces the idea that the Federal Reserve might keep interest rates higher for longer. And we saw the reaction. Treasury yields jumped. The U.S. dollar got stronger. For some people, that really challenges the whole Bitcoin as an inflation hedge story. When you can get a better return on, say, government debt, suddenly non-yielding assets like Bitcoin, they have more pressure on them.
Right. They need to prove their value beyond just scarcity.
Exactly.
Okay. And beyond jobs, there was also that huge fiscal news. The House passed the $4.5 trillion, one big beautiful bill, massive tax cuts, new spending. What's the sort of immediate take on that kind of stimulus and how might crypto react?
Well, in the short term, it's definitely stimulative. Big tax cuts for corporations, incentives, spending that should boost profits, help consumers, give GDP a lift.
Okay.
But, and this is the big but, if you look longer term, it's projected to add over $3 trillion to the federal deficit.
Yeah.
Analysts are warning that funding that could push interest rates up later on. Moody's even mentioned it when they downgraded the U.S. rating recently. So
yeah,
good vibes now, maybe. But it raises those long-term questions about inflation and debt that crypto traders, especially the Bitcoin as a hedge crowd, will be watching very closely.
Got it. And the ISM services PMI, that measure of the services sector, also popped back into expansion. So again, looks like economic health. But given the Fed's stance, could this actually be, too much good news? Could it paradoxically work against risk assets?
You've hit on a key tension there. Yeah, the PMI at 50.8, strong new orders. It definitely fuels hope for that soft landing, tame inflation without a recession. Risk assets like that.
Right.
For crypto, that optimism eases fears about liquidity drying up. But the irony, as you said, is that very strength might just keep the Fed more hawkish. So we're back to that interest rate worry. It's like walking a tightrope.
Okay, so a strong economy, policy stimulus on one side, but then caution flags tighter macro liquidity, that high fear and greed reading. What about inside the crypto world itself? Are there things happening there adding to this optimistic but nervous feeling, or maybe pushing back against it?
Oh, absolutely. The last day or so really highlights both sides, real technical progress, but also those persistent risks. On the plus side, Ethereum's big Pectra network upgrade just went live. The key thing here is smart accounts.
Smart accounts.
Yeah, think of them like programmable wallets. It could totally change the user experience, like your bank app, but on the blockchain, enabling things like paying transaction fees automatically, setting up recurring payments, even social recovery if you lose your keys. It's a massive step for usability, making Ethereum feel less complex, more like a normal app.
Okay, that sounds pretty significant.
It is. But then you get the flip side. Stark reminders of the risks. Like that $140 million hack at the Brazil Central Bank, a chunk of that stolen money was reportedly laundered using crypto.
Yeah.
It just shows how crypto's pseudo-anonymity is, a double-edged sword. Great for privacy, but also a potential channel for illicit funds, even if it's traceable. That's a challenge for adoption and regulation.
Right, that security aspect is always there. And what about Coinbase's layer 2, Base? We're seeing a trend there too.
Indeed. Base has seen some pretty significant net capital outflows this year. It's a big reversal from last year's growth spurt. The data shows something like $4.3 billion flowing out, while Ethereum's mainnet actually gained about $8.5 billion in net inflows.
Interesting. So money's moving back.
It suggests that maybe some capital that rushed into newer chains is now returning to the perceived safety and robustness of Ethereum, especially with upgrades like Pectra landing. It also just shows how competitive that layer 2 space is now. Capital is chasing the best tech and security.
Okay, so wrapping this up, what does it all mean for, for you listening? Today's recap really shows this mix. Strong economic signs, big policy decisions, cool tech upgrades in crypto like Pectra, but also these stark reminders of risks like security issues. The market, like we said, it's walking that tightrope, optimistic, but definitely nervous. So for you, the investor, the main takeaway really has to be the importance of staying informed and vigilant. Keep an eye on those macro signals, bond yields, the dollar. And follow the crypto-specific news closely, those upgrades, any hacks, shifts in regulation, and always prioritize sound risk management. Think about your position sizes, diversify sensibly, and really try to avoid that FOMO trap. So maybe the final thought for you is this. With everything shifting so fast, how can you best position yourself to capture some of the crypto market's upside while also rigorously protecting yourself against those inherent risks? How do you make prudence your most valuable asset in all this? Enjoyed the brief? Please like and subscribe. We deliver fresh market updates, macro signals, and crypto news daily in just 5 minutes. Live streams coming soon. Stay tuned.